my first advice generally is get yourself some Bitcoin. That's my first advice. And my second advice is when you get the Bitcoin, make sure you get it from a place that will let you switch custodians or take personal custody of it. And then after you do a little bit, then start to get educated, and then you'll form opinions about where you want to hold it long-term and how you want to hold it long-term. And you'll have all your options available. You get a lot of choices. I would probably err on the side of picking the most convenient Bitcoin application or exchange you can find in your jurisdiction. It depends on what country you're in. And if you buy one on an exchange, make sure you can take the Bitcoin off the exchange to your private wallet. So you could buy it through Fidelity and take it off the exchange, or you could take it off the exchange of Coinbase. And I kind of like Square because you can buy it and also take it off the exchange. I think that the average person ought to come up with a Bitcoin acquisition service provider that they're comfortable with. And then they ought to think Bitcoin is like a long-term savings account. And when they get a bonus or they get some money that they can afford to put away and save for the long period, they should convert it to Bitcoin, just dollar cost averaging in, not really getting stressed out over timing the market. If someone pays you in dollars and you don't need the money now, you convert to Bitcoin. I think that's a good idea. If you're a Bitcoin miner or ready to be a Bitcoin miner, you know it, but probably the normal person isn't. I think in terms of getting paid in Bitcoin, if you have you could ask someone to pay you in Bitcoin. It would be the tax efficient way for them to do it would be, if you told me to pay you in Bitcoin, I would go on Square or go on some app. I would buy the Bitcoin today, and then I would transfer it to you today before the price changes, so I don't have to file it with my accountant and attribute a loss or a gain to it. So generally, if you're getting paid in Bitcoin, someone's going to be buying it and transferring to you. But if you got to keep in mind that if they could do that, you also have the power just to take delivery and take the pay in dollars or any currency, and then you just convert to Bitcoin upon receipt. Probably the big takeaway here is, Bitcoin's an asset, and it's treated as property for tax treatment. It's not treated as currency. And what that means is you generally want to buy it and hold it for long periods of time, because every time you transfer it or you sell it, you incur a capital gains tax or some kind of tax. And that's very inefficient. It's just a bad idea. So the longer you can hold it, the better. Anyway, probably the single most important thing to do is convert as much of your discretionary income as you can afford to save into Bitcoin as soon as you can, because it is an appreciating asset over long periods. But don't do so much that it just stresses you out and you can't sleep at night. I don't think I could give a single recommendation to anybody. I think that as people get more security conscious, they tend to move toward hardware wallets with multi-signature, multi-factor authentication. But it all depends upon how much Bitcoin you've got, and also where you are, and also, are you a business or are you an individual? And maybe you have some other personal issues. What's your transaction frequency? Well, I think in our current monetary environment, you could reasonably expect that the economic energy in any currency in the world is going to lose 1% of its value every month. And in a weaker currency, you would lose 2% of your value a month. And so if you're saving your money in a currency, then the clock is ticking and you're losing your savings. If you're saving your money in a stock or a stock index, generally at least half of the value of the stock, if not more, is based upon the cash flows. So a large number of things that you could hold with your life savings are exposed to currency debasement. And so it's important that in a weakening currency, you, in a disciplined fashion, be converting your economic wealth over into an deflationary asset that's not going to be debased, that won't be inflated away, and that presumably will appreciate in value faster than the rate of the currency expansion. So Bitcoin is kind of that engineered savings account in cyberspace. If you hold 90% of your money in the other savings account and the currency loses lots of its value, then your life savings is just leaking away. At a 15% in monetary inflation rate, that means that you're going to lose half of your money within about 4 years. If you're in the US and Europe and you're in a strong currency that's kind of pegged to the dollar, we kind of think that that's weakening 15% a year, maybe more, but like 15% a year, a little bit more than 1% a month. But if you're in a currency that's weaker, that is weakening against the dollar, certain currencies, in the second tier, they're weakening 20% faster, and the third tier currencies are weakening 2 to 3 times faster. If you think that the currency that you're working in is weakening against the dollar, like you can see this in Turkey, you can see this in Lebanon, you can see this in certain other countries, Nigeria, you should scramble harder, right? You don't really necessarily, the risk of not doing anything is higher than the risk of doing something. And so there becomes a point where I would say people ought to move fairly aggressively to at least get their money out of the weak currency. You got to judge how much you trust that currency in your given country, wherever you might be.